He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
I'm here with Scott Peckford. This is a special edition of the Angry Mortgage Show. Super special edition. It's almost like an incredible coincidence and also very fitting that the first actual guest on Angry Mortgage is Scott Peckford, who has had me on his podcast many times. The truth is, Scott's the original. He is the OG. He's the guy who brought podcasting in the mortgage business to Canada in a big way. He's done everything. Like he developed the number one sort of big range, big participation Facebook site. People communicate that on every day. There's lenders. There's actually a guy at every major lender assigned to watch that site, to read that stuff on I Love Mortgage Brokering Facebook group. Like every single day, somebody's assigned to look at that.
Just keep an eye on, make sure that reputational and answer
all that
questions.
Stuff, all that stuff. But Scott did all this. Scott had a training company, a coaching company, and now has developed a mortgage brokerage. And as he constantly says in his podcast, I planned on never having a mortgage brokerage in my life. It was the thing I didn't want to do. Okay.
Yeah.
And here we are with bricks.
Yeah. All
right. So this is a special edition. We're going to call this the Inside Mortgage Brokering Podcast, because for the average person, average consumer, this is all just inside stuff.
Right.
Okay. But we want to get it out there to the mortgage brokerage community because it's pretty damn interesting. And like I said, it's a real ironic, but interesting thing that Scott's the first guest on the pod. So.
Right. It was just random because I came to visit you and you said, hey, come on, let's chat. And I'm like, all right, let's do it. So
only upside of having a studio ready to go every minute, right? So
right. And it took you like 60 seconds to get set up. So perfect.
Yeah. Look, it took about 9, 10, 12 months to get it going.
Right.
That was you do everything a lot faster than I do. So my first question for you is, I have been thinking about this a lot since I listen to your podcast all the time. And it's right there on the podcast all the time. You didn't want to open a mortgage brokerage.
No, sir.
And then you did.
Yeah.
So exactly how did that happen? Spill the details of how it happened.
So for the last 6 years, so I've been in the mortgage brokers business since 2006. In the last 6 years, I've been doing training in mortgage brokers, which I quite love. I love the coaching business. I never coached rookies. I was like, rookies, I don't want to coach. Nothing against rookies. We do it lots now. But at the time I was like, failure rate's really high. There's a lot, I'm good at, I think I can coach on sales and marketing, but underwriting and stuff I knew is not my specialty. And so I created a program but I had so many rookies reach out. I thought, I'll just do an experiment. Let's see if this works. And I ran a program for training rookies through that training company, and it kind of worked. It worked for some of the folks, but not a lot of them, because they didn't have great underwriting support. So they'd go find leads, and then they'd have a great mentor, and the mentor could have lots of experience. But if the mentor was busy, they could wait a day or 3 or 5. Sure. And then they're like, okay, I got a lead, but now that they're gone because my mentor hadn't got back to me. So I thought, if we're going to properly support rookies, we need to have underwriting support, which means either the fee is going to be really high, which means very few people can afford it, or we just create a brokerage and say, look, if you're successful, we'll be successful. Keeps us, we'll become partners in it, if you will. So we bring people on, do 10 mortgages, 50-50 split, and then you just go wherever you want to go. That was the plan.
Right. I remember that. Yeah.
And I was like, this will be great. It's basically it's a training company that's baked within a brokerage so that we could provide the support and do the underwriting. And the way that we solve the mentor model is we have underwriting coaches sitting in a live Zoom room 40 hours a week, which is it'd be a challenging thing to do. And they get hundreds of visits a week, like the number of visits they get. But people come in with a file. They, hey, what do I do? They come in with some documents. And so they can hang up that phone. Even this rookie who doesn't know anything really about mortgages, go into a room with somebody who's got 10 years experience, and they can punch above their weight class. So they're able to compete and win files that they probably wouldn't have because of that level of support. And so and it worked. But then the challenge is that the rookies initially, they didn't want to leave. I was like, shoot, I didn't consider that, because my wife always says that she'd call me Scottistic, right? She's like, you don't think about the human side. I'm like, all right. So they didn't want to leave. That was one thing. And then the second thing is that some of my friends who do big volume were like, hey, I want to join your brokerage. And I'm like, well, it's going to have to look different. It can't, like, what I offer to a rookie,
50-50 ain't going to work.
They're not going to come. So then I had to really think about what would a brokerage look like that I would join if I was still brokering. So that's how I got into it, even though I was kind of backed into it inadvertently, because I was still trying to solve the problem of training. I wasn't actually trying to solve the problem of a brokerage to start.
Okay.
But anyway.
So to sum up, you developed now into a recruiting brokerage. You want to add people.
Yep.
Okay. And you've been successful at it. And if I was to summarize it, I'd say that your unique selling proposition is that while everybody else promises training and promises development and promises support and promises somebody who's going to look at your file right away to try to help you out, Mr. and Mrs. New Person, it's normally bullshit. I mean, you were very kind about it. You said, oh, mentor's just busy. But also half the time it's just bullshit. They say that they might have a great big library of videos to watch, but that's not really training. You and I know that. People have to be situationally walked through what's going on.
You can't really, especially underwriting, you cannot learn that from a book. You can't learn it from a broker kit. You've actually got to have real files. It's like driving a car. You can't learn, you got to get in the car, drive, and learn. And this is, I believe, the same thing with underwriting. You really have to learn it file by file, because they're all so different. And you can't remember all the policies. Like, there's certain nuance to the policy that you'll only remember when you get burned on a file and you're like, oh my gosh, I just lost this file, or I screwed it up. You've got that lesson, but you can't get that from a video or a broker kit. No. Or anything. So
there's some things you have to do by doing it. You have to learn by doing it, physically doing it. It's the only way you remember. Okay. So it's grown and it's taken off, and it's not just a new flash in the pan thing anymore. It's established, and you're pissing off a bunch of other brokerage owners. Okay.
Yes, I've heard.
I think some of them have actually told you they were unhappy too, right?
Yeah.
All that stuff. So now that you're kind of deep into it, how do you assess the reaction of other brokerages to what you're doing? I mean, how would you sum it up?
I don't pay attention to them at all. The only thing I think about is, what do my agents need? And if I obsess about our agents, our rookies and our pros, then the competition is and if I know that they've had to, some of the people have adjusted their model. Great. Some people will not. I don't care. I don't pay any attention to them. All I think about is, what do my agents need? And we were talking about this before we came in here, this whole idea of fulfillment, which I don't know if you want to talk about that, but I'm like, the way I think of our company's mission is how do we help our agents increase their revenue per hour? And so all the decision-making filters, the leads, not awards, it's if I can help them increase their revenue per hour, whether it's, I want to do more volume, cool, or I want to work less hours because I want to, and what kind of structure can we have in place? That's what I think about. If we can do those two things, then we'll have no problem growing, and we'll have no problem keeping agents.
Okay, we'll talk about fulfillment, but you've actually brought me to the point of something that I've been thinking about a lot for the last year. Okay, so back in the Stone Age, when I started in the mortgage business, we used to
with a stone tablet, and you'd bang out the
no,
mortgage.
We there's not
you
that
and Boris
bad. Not that bad, but what we did was we would have you would go to the place where they were killing sheep, and then you would get the skins, and then you would put really thin them right out. That's called vellum. Okay, and then we'd hire a monk to write the mortgage application on the vellum. So that's quite a while ago. You're right, but I have been thinking about this. When we started the mortgage business, everybody started in the same way. That you joined a brokerage, you apprenticed at that broker, effectively apprenticed, but you were on your own. Mm-hmm. They would give you some training, weekly meetings. They would give you some mentorship.
Maybe business cards they'd throw in.
Maybe business cards. Kind of we won't bother talking about the splits because it's 28 years ago. Yeah. There's no point in talking about it. But the other big thing about it was the absolute goal was to bring each person up to the point where they were an extremely knowledgeable mortgage professional, where they could handle any file. It didn't happen overnight. It took years.
Yeah.
Okay. But they could handle any file. Now, they might not do commercial. They might not do development, but any residential mortgage that came their way, any size, shape, every aspect of it, they could do. They understood it. They understood underwriting. They understood what it took to get a file funded. They understood all the problems that could happen when a problem came up. in the finishing of the file and getting the file to close. They knew exactly how to handle it. And the concept really was that the goal would be to turn the person into a consummate pro.
Yeah.
Didn't always work, but that was the theory of brokerages, that we would have, when we were finished with you starting as a mortgage agent, starting at the beginning of your career, when we finished with you, you would be just a gem, top-notch operator, understood everything about the business backwards and forwards about residential mortgages. Okay. And let's face it, it was easier back then.
Way easier back in
way
2006.
easier, like way easier.
Yeah, underwriting was easier. Everything was simpler that way.
But it's still the goal.
Yeah.
It was the goal that we would end up with this consummate mortgage professional. Today, as I talk to brokerage owners, not just you, but tons of them, that's kind of disappearing. That's being replaced by, we want to develop excellent tactical marketers who can find leads, can find possibilities of mortgage applications, can bring in an application. Then we're going to turn it over to a different group of people. We're going to analyze it, underwrite it, and figure out what the best result would be for the client. How does this application fit into mortgage world? What's the best deal? How do we get it done? And that specialist would then go back to the marketing person who's a mortgage agent and say, here's your best option. This is what we figured it out. This is what it is. This is the right mortgage for these people. And that's what you should present. Okay. And then still, again, another additional layer of to say, once the client's agreed, yes, I'll take it. Yes, this is a great solution for me. Great mortgage solution, that we would then turn it over to another group of people who would finally collect all the documents, work with lawyers, work with appraisers, work with the lender, and get that to the point of actually funding that mortgage. Okay. So this is now becoming something radically different than the true mortgage expert, that the person who understands every microscopic detail of a mortgage and can answer every question, seen it all, knows everything. We're now going to not have that anymore in a real way. We're going to have people who are just great tactical marketers. They can find people, find situations, create referral sources, do all kinds of positive stuff like that. But in the end, that's all they got. They don't really thoroughly understand the underwriting of mortgages. That's where I see the trend of the last 2 years. What are your thoughts on that?
Well, I think that that's not new. Like, you probably know GenCore. They've been doing that for years. So GenCore is based out of Calgary, and they've had a underwriting hub and basically salespeople who'd go out and find business. And some of them could barely spell mortgage, but they were great with people, and they would figure out what to do with it. There's probably the reason I think that that's becoming more prevalent. It's just becoming more complex. Like, underwriting is not, like, as we both know, it's much more challenging than it was with all these new regulations, insured, insurable. Like, it just gets the complexity. There's a lot of complexity to underwriting. And so I could see why there's this movement towards that. Now, I think that personally, the brokers that other than the rookies that we want to train, we'll tell them all the time, we want to teach you how to fish. We're not going to fish for you. We're not going to be your fishing.
I get it.
And so I think that as a broker, your job is selling and strategy. I don't know that if you want to be good at selling, look at Jim Terlucas. He's good at both. He can sell, and he understands the strategy of the technical aspects of the products. And you could convince somebody to work with you, sure. And I think you can build a business. There's many ways to build a business. You have one way. There's another way. I personally think that that you need to have some, technical knowledge. You don't have to do all of it, but you do need to understand it to be able to communicate it to a client. I could be wrong.
The guy you're citing, though, Jim Terlucas, he is that old-fashioned, absolute technical expert.
He is a technical expert, yes.
So
and so I think that you need to have, I think the two skills, if you could only pick one. So if I had to strip it all down, there's sales, let's call it that. There's the strategy part of it, or the technical aspect. And then there's the fulfillment, which that part can be done by many, many people. Sales and marketing is still the superpower. You're great at marketing. People don't know that you're marketing when you're on Twitter and you're getting people to argue with you. And the people that are arguing with you are not going to be your customers, but the people watching it go, I'm going to reach out to that Ron guy. I want to see it. And this happens to you all the time, I'm sure. And so you're doing marketing that people don't even know, that they don't even understand it. They're just watching it going, it's marketing. And so I think the marketers for sure will rule the world in terms of, like, if you can be good at that, you'll always have a job and a career, whatever you're selling mortgages or whatever the next thing is. But I think I personally like our model, the way it's designed, at least currently. I'm not saying that we would never change it, but currently where we're at in the growth of our business is saying, okay, let's find people that are well, I can coach on the sales and marketing piece. That part I'm good at. Strategy, we got some people that can help you, but hopefully if you've been doing this for a while, you understand some technical aspects of the mortgage. Then the last piece would be the fulfillment, which I think for most people is the lowest dollar activity that they could be doing, and probably one of the first things they should offload if you can.
Yeah. In response to your question about fulfillment, we have an entire fulfillment department. Okay. That's all they do 24/7, literally 24/7. They do it on the weekends sometimes. Okay?
Right.
Like they do sleep.
Right. You let them.
Yeah. They're allowed to sleep. But
I saw them back there. There's like bunk beds, and they're like, you're like, get back to work. You're yelling at them when you're walking me through your office.
So which makes me think of an extremely odd experience that happened last week. A friend of mine, Veronica Love, she's with TMG. She was putting on a talk at a meeting, all women meeting women in mortgages, and it's a really successful operation. Veronica's a great, successful person, and she brought up my name. She said, "You can't be afraid to reach out. You can't be afraid to talk to people who can give you information and give you answers to your questions and push you in a direction." She said, "I even reached out to Ron Butler." Okay.
Right.
So the implication was the most scary, rotten son of a bitch in the whole mortgage industry. I reached out to him and he said, nobody reaches out to me.
Right.
Which Veronica maybe didn't know that was planned. That was part of being a mean son of a bitch, was that people don't bother you.
Yeah.
But she did. And she was kind enough to say, you can reach out to anybody. But I just thought it was funny that, the poster boy for worst son of a bitch was me.
Right.
So, but you can still reach out.
You've cultivated that over the years, much to your credit. Like, I think you're a very smart marketer that people underestimate in terms of, they think that, I think when they look at your business, they think you buy leads, which you do advertising,
which we do, yeah.
But they don't understand that there's a personal brand behind it, which is something that some of your competitors have a hard time. Like they can't do that. Like some of the big, we know some of the guys at some of these other companies, and they tend to be advertising their brand. They're not advertising a personality, and people will get attracted to a personality, a brand, sure, but like there's something about even though they're not talking to you, even though I'm sure that when these people come in, these leads, they're not getting Ron Butler on the phone, but they're getting Ron Butler's people, and they're okay with that.
So Dan Eisner, he's a friend of mine. I'm proud to say he's a friend. He's a good guy. He's been one of the originals. He's an OG guy too, original, direct consumer marketer. And he was kind enough in a presentation he put on to mention me in a conversation he put on to a group in a convention. And he pointed out, much like you just said, he was pointing out things like, this is how Butler does it. And he actually gets more leads from that than some of these people who are advertising. Obviously, his operation, True North, gets far more leads than we do. Mm-hmm. It's a much bigger operation. Same with Rate Hub. But he points out that compared with some of these others, he actually gets more leads off of his. Now, Dan was also being a completely professional businessman, also pointed out that thing is, Butler's old and fat, and he will be dead someday. So that's the downside of his marketing. You do market a personality.
Yes.
He didn't say old and fat. He's a much better guy than that. But he did point out that, hey, he's going to be dead. And that's the downside of this. Of
the personality.
The trouble with personality branding is that once that person's out of the picture, so goes the marketing. That goes as well. So I'm in it. I'm in it. I got to keep doing it. But yeah, there's a limitation to it. It's true.
You know what I think about is, like, in Vegas, you've got like Celine Dion, who's a personality. And so she makes a ton of money when she does her shows. And then you got the Blue Man Group. Well, the Blue Man Group, you can swap people. You don't even know who they are. Yep. Swap. So if you think about, like,
they're blue. They're just blue men.
They're blue. And you're like, okay.
I think some of them are women now too.
I don't even know. Yeah. So like, the reality is that that's a business that those guys can step out of, and it can still be running shows in Vegas. Where as soon as Celine Dion stops, that's it. And so as I just compared you to Celine Dion. How do you feel about that?
Seeing as Celine Dion is near death right now. I mean, like, unfortunately, she's got very, very ill. But yeah, I get it.
Yeah.
And
so there's a different.
I don't mind being compared to Celine Dion. I actually went to that show in Vegas when she had a residency there years ago. Went there with Sharon, and everybody thought it was the greatest thing since sliced bread. So right. I mean, I'm sort of not much like Celine Dion. I'm like.
Right. Well, that was part of my intention of making an extreme example.
Okay, but go back to this thought for a minute that we're never going to have, in the way the future's unfolding. Okay, that the idea of this ultra professional who knew every single thing there is to know about mortgages, which still exists, by the way. I mean, they're out there. Yeah. Some of them are younger. There's guys who do great work who are in their 40s, gals too, lots of great gals doing great work, brilliant work. Yes, they all offload fulfillment. Like nobody chases their own documents and asks, show me how your down payment worked. I mean, that's obviously bad money spent when somebody else can do a great job at it.
Yeah.
But they do understand every element of the underwriting. They understand everything that could go wrong. They have an immediate answer if someone says, "Hey, like there's an undischarged mortgage over here. I found out from my lawyer that the previous people didn't discharge the mortgage. So what do I do?" And that those people, for this weird technical questions that come up, they have every answer at their fingertips. Right. Okay. So the end of that person, is it just inevitable? Or is this just the way it's going to change? It's going to turn out that way.
Well, I think that yes, but the advantage will be that some of this data that we currently carry around in the heads of some of these very technical people will be easily accessible through tools like whether it's like I've seen recently like a ChatGPT engine that you could upload your own stuff into, and then you just ask it questions and it answers like whether it's regulations. And so it's not going to replace a person, but I think the enhanced broker will be that you'll have a broker who's enhanced with AI. And I saw a quote a little while ago, which was, you're not going to lose your job to AI. You're going to lose your job to a person using AI. And I'm like, I think that it's a better tool. If used correctly, I think they're tools that can make you more effective longer. But I think you're right. But again, if you had to pick one skill, if there's one skill as a mortgage broker that you could be good as sales and marketing, like if you're good at that, the world's your oyster. And it's a universal skill once you get it, because if mortgages became illegal tomorrow, like maybe we're doing crypto. I don't know. I'm into crypto, but I'm saying
crypto. Don't do goddamn crypto.
Yeah, crypto.
That's just shit.
Yeah. Okay. Whatever the next thing is. But I think that the sales and marketing skills, and my son, who's always like, he's like, "Dad, I want to make a lot of money," and I'm like, "Well, learn sales." Like, I can't teach you. He wants to learn how to work on. I can't teach you to work on cars. Like, you got to get someone to help you with that. But if you want to learn how to do sales and marketing, this is something I can help you with. And wherever the world goes in the next decade or two, somebody's still got to get your attention and convince you that this is and I still think that that's going to be a valuable skill. But I think you're right. The highly technical salesperson is going to be
thing of the past.
I think you're right.
Okay, another question that has been rolling around in my head. You sometimes bring on experienced, higher volume people, and sometimes they're a great fit, and sometimes they're not a fit.
Yeah.
And sometimes you find out they're not a fit really fast. So could just illustrate to me how you find out somebody's not a fit when you bring on experienced people.
So, and I think this is because bringing on experienced people is only new. So we've only started it in the last 7 months or something.
Okay,
right?
But
so
you've had some incidents.
We've had some incidents. And so we've had some people that are great fit and some people aren't. And I would say the thing that I look at as an example, we had some people that did very big volume, and I realized pretty quickly we're not matched. And it was more to do with the fact that it was not an unethical thing. Unethical, that would be like really fast. Like, no,
it's instant. No.
Yeah. It's not an unethical thing. It was more of I'm really cognizant of the fact that if the kind of brokerage that we want to build, we need to focus on collaboration. I think that 1 + 1 is 3. I think that the training company taught me, because as a coach, I used to coach on a couple things, and I realized if I get other coaches, we can make this way better, because all the problems that mortgage brokers face, somebody solved them. You solved a whole bunch of problems, someone else and it's like, who's got the answer to my test that I'm currently trying to beat? And so the focus for me with the brokerage is we got to really make collaboration a key thing. And so if I felt in particular, I had some folks, I just realized that the things that they were going to want to do was going to significantly impair collaboration. And I was like, I'm not going to enjoy this. And I was talking to a really good friend of mine who's known me for a long time. And I was explaining, he's like, dude, this is the honeymoon phase. Like, this is going to get worse. And I was like, oh my gosh, you're right. And so I sat down with these guys, and 150 million year producers. And I'm like, we're not a fit, man. You have to and I know they were shocked. They were like, I can't, nobody tells us to go somewhere else. And I'm like, I just don't think that. And it wasn't, again, nothing to do with it was just the collaboration piece for me is really important. I really think that, that if you can collaborate, you can do, you can't out iterate a group. If I give my best ideas to a group of people and then they go run experiments, and then all of a sudden this one does really well, we're like, well, if they don't collaborate and share that back, if they do, everybody gets the benefit of it. If we start to silo things, that's where that was my thinking, was like, and we're still figuring, learning this stuff and trying to identify who's a good fit, who's not a good fit. And we'll make mistakes for sure. And I'll own them. If it was on me and I made that was my mistake, I'll own it and try to learn from it. And I think of business, and I read this somewhere. It was like entrepreneurs who think of business like an experiment and they're not married to an outcome earn 40 times more money than somebody who has an idea and it's like, this is my idea. And so it's like, I think of everything as an experiment. I have a hypothesis, I'm going to run it. And if it's either going to work, cool, or it's not. And I'm like, all right, what didn't work and how do we learn? And I'm okay with like running experiments as long as you don't risk your company to run experiments. Like you don't run the whole company into the ground while you're trying to run an experiment. And now that the company's bigger, I have to be more careful about experiments. They got to be done small in little isolation. Let's try this as a little test. If it works, cool. If it doesn't, we haven't screwed up what we've already got. So that's something I've been.
Because that's actually something I've always said about you and other mortgage, even lender bosses or other mortgage brokerage owners said, "Oh, this Scott, what's he doing now?" I said, "You know what? He's a trier, and we need goddamn triers in any business.
Right.
We need people who want to try something new, who want to see what's possible. And it might never work at all." Okay,
well, I have plenty of dumpster fires, plenty of them.
Yeah.
Like literally, you can roast marshmallows over this thing because it was a terrible idea, lost some money. But I feel like each of those has got me a little bit better at at least the initial experiment, and then I don't tend to lose as much on the experiments now. The other piece is that with the brokerage, like everything that anything that I create or invent will be owned by the brokerage for the benefit of the brokers. And so I was like, I still get to do my thing. I get to do it at a bigger scale now. So instead of just doing, whatever I was doing and I had coaching or I was a mortgage broker, now I'm able to do things at scale that I could never do. And I'm like, this is
all right. So here's a good one then. What is the worst? What is the thing you've discovered about running a brokerage that you just hate the most? Like, what do you hate doing this? Because I know what stuff that I learned to hate that I found out by owning a brokerage that I hate.
Wouldn't say that hate is a strong word. I would say the things that
I love to hate though. This is angry mortgage for Christ's sake.
So I would say things that take away my energy is like meetings. I was surprised at the number of as your team scales, the number of more meetings I have to have. And I had to, and it really because I'm like meetings, if I don't need to be here, I don't want to be here. I'm like, oh, let's move. I got stuff to do. And it was only when I had this mindset shift of like meetings are where multiplication happens. If I can get together with my people and get them going, this is how I multiply my effort. And so prior to that, I really did not like meetings were like, just, I hated them. I would be the worst person in the meeting, even though I was supposed to be leading it. I did not want to be there. And I've been learning to be like, hey, this is where multiplication happens, but I still would rather have somebody else run them. So I'd still rather have somebody else kind of, and I have a plan in place for that. There's some, things that we're working on right now that can free me up to spend more time on marketing, spend more time on making things. I like to make things for our brokers. And so if I can do those two things, then I'm in my happy place and I can have the most impact for the brokerage. So I'd say right now that would be my big challenge is
okay, but the guy at the top, there's always things that just go fucking wrong. Like, it might not have happened yet, but I'm going to guess you've had some like major compliance hiccup that looks like it might be bad doings and stuff.
So we've had a couple complaints.
Right?
Yeah, I remember when we got up to like, I don't know, just under 500 files, and I was like, wow, 500 files, and we haven't even had a complaint yet. That's what I thought. I was like 465. I literally thought the next day, I'm like, I get an email like, damn it, I shouldn't have said anything. And it ended up being nothing, but like because people can, it was a complaint done to the regulator or whatever, saying, hey, it was one of the brokers, and so I was like, so those parts, yes, those things just happen. But I also think like, now my thinking is that I only want to solve hard problems. Hard problems are the ones that are the most profitable. I don't want it like training rookies at scale is a hard problem. Like, and I feel like we're doing
it is the biggest problem.
And so the only things that I'm interested are because people are you can make more money solving painful, hard problems than you can easy or aspirational problems of like, that's a new insight that I've had in the last 18 months. I'm like, let's just go after the hard stuff because nobody wants to do it. And if we can do it well, it's a competitive advantage versus solving easy problems, which everybody wants to do. But I'm like, that's not interesting to me. I like the hard stuff.
No, we share something that we're both completely independent brokerages. Mm-hmm. Like Butler Mortgage has no affiliation with any of the big mortgage groups out there. Your organization has no affiliation.
For some reason, I thought you were under a brand, but I guess I was mistaken.
Oh, when we started, 12, 15 years ago, like Ron Butler's always been in the mortgage business. Sons have been in the mortgage business equally long time, Dave and Will. And, but completely on our own. Yeah. When we first started the brokerage, I guess like 13
I think
years ago.
we're both wired the same.
Yeah, 13 years ago. So yeah, I think we were with Verico for the first 3 or 4 years. Yeah. We were with Verico and then not. We haven't been with anybody forever. So what's the reason behind that for you? I know what it was for me, but what's the reason behind it for you?
It was because we knew that once we decided to go down the path of like recruiting brokers, and I didn't want to be part of a network that was like, hey, you got to slow down. I'm getting calls from other owners. They're not happy. They're and so I didn't. That was one thought was the thing. Second is that we have very big ambitions for what we're trying to do. So the fact that at some point we probably were going to become independent, and to do it later is more painful than sooner. So when you have 100 mortgage brokers and you got to change your Filogix codes and you got to change all that stuff, it's painful. At 500 or 1,000, it's like, it's way worse. And so I'm like, this is not going to get better. Like it's not going to be easier. And then the other thing is some lenders required us, TD, for example, we did in that first 12 months, we did 64 million with TD, but we were under another brand. And they said, you start over. You don't get full volume bonus.
Right.
And so I was like, well, we got to do that anyway. So let's just friggin' do it. Like, there's no pull the Band-Aid off now. It would have made financially more sense for me to stay under a brand short term. But then eventually I think what would happen is if we got too big and then we did leave, there'd be a lot of hard feelings. You built your brand on the back of our brand and all the, like, just the nonsense of that. And I was like, I don't want that hassle. I'm just like, let's just, and I personally don't think that most of them would actually, they're not going to provide a ton of value. They're not going to be, other than, aggregation of volume, potentially that would be one of the benefits they'd have. But there wasn't a lot of other benefits that I saw from the different brands that were out there. So that's why we decided to go independent. And by the way, we blew way past our TD threshold. So, and it's all retroactive. So we're fine now. Yeah. But there was a period. And I tell people that if they join us, I'm like, hey, we at the time, we're not at the top tier with TD, but we did, 25 million with TD last month. And so we're no problem now in terms of, hitting status and stuff with them. But
yeah, but there's always that new lender or that lender that you'd like to work with that just says, nah, I mean,
So far, we have the fortunate part is that some of the folks that have joined us early on are fairly good producers, and they've opened doors for us on lenders that were like, hey, okay. Like ATB, for example. Like, I'm like, how the heck are we going to get them? Oh, I used to work there. Guy does big volume. He calls them up. Here you go. So that's a lender in Alberta if you're not familiar, but that has been really helpful. So it's basically the people have the relationships. The great agents have relationships. And so some of those have really opened some doors for us in terms of getting access to some of these folks, right? For the benefit of other agents.
Cool. Okay. Yeah, that is one advantage of being a recruiting brokerage. If you find somebody who's doing, doing 50, 60 million with a credit union, I mean,
they're not going to cut that off.
They like him. He likes you.
They know each other. Man, it's like. So that was how we solved it, even though I didn't realize that was how we were going to solve it. It just sort of happened organically. And that's what I've been seeing.
Do you find lender relations as a challenge sometimes, or not really? You just don't pay attention to it?
I need to pay more attention to it. Okay. I feel like it's if I'm honest, it's a weakness of mine because I love our lender partners. I think I know without lenders, we don't have a business.
Absolutely not.
And so I know that the importance of it, but again, my mildly autistic ways, I get so focused on a task that I'm like, all right, I gotta. And so again, I have somebody coming on board that's going to well known, that's going to help me with this as well. So that there's two of us instead of just everything being on me trying to manage those relationships. But I want to have excellent relationships with our lender partners. But I actually have something I can talk about, which could be controversial for the. Yeah. So one of the things that most mortgage brokers are unaware of is that there are I call them network fees or kickbacks to the networks at the network level. So if a brokerage, I'm not going to name any names, but a large brokerage does a certain amount of volume with however many billion with something like Home Trust, that lender is going to pay the network, the top level. I've heard that one network gets 14 basis points, for instance, from Home Trust mortgages at the network level. Now, the network level, they have no control over the agent that's 3 or 4 levels down.
Well, I got to interject because I'm like dear friends with everybody at Home Trust, so yeah. I'm not 1,000% sure there's 14 beeps.
But so this, whether it's 6 to 10, let's call it like anywhere between 2 to 10. I've heard that number. It may not be correct. But say 2 to 10.
2 to 10 exists.
Yeah, 2 to 10 exists.
Or 2 to 6 exists. I mean, there is a number that goes to the very top of the house in the brokerage business. Yeah, there's extra money that goes to those companies.
And here's the thing. I don't think that nobody talks about it. So this is a big non.
You and I are talking about it.
Well, but the network level don't talk about it. So the brokers don't understand how this works. And then the other part is that I don't think that the network actually has any influence other than the fact that we can say we're going to tell our brokers not to use you because you're a bad partner, which is they're not giving us kickbacks, so they're a bad partner. And I'm like, I don't think
which absolutely happens. Yes.
And I think lenders hate paying it, but they've got their head in the noose and they have to pay it. I think that the lenders are like, hey, wouldn't it be better to actually have better efficiency programs or something for the person who's actually doing the deals and deciding home trust over equitable or whatever that relationship is instead of at the top level. That's something that I see in our industry. And then of course there's the kickbacks, the network fee, then there's also the platform fee. So the reason that we don't pay for most of these platforms is because there's another, 2 to 5, it used to be more, 2 to 5 basis points that the submission platform has to make money.
Sure, absolutely.
There's a lot of money into building that stuff. And so there's money that's there. That's fine because that as a broker, you either pay for it, you're either the product or you pay for the product. And then of course there's volume bonuses that don't always get to, quarterly bonuses. For instance, I did a post recently about the quarterly bonus that Scotia pays. And I shared, hey, look, we're paying this out. And I heard there's some owners who were not happy with that because
they would be severely pissed off at you about that.
And I was like, and here's the thing. I have no problem with them making money. I have no problem with them if just tell them, say, hey, here's how we make our money. You make your money this way and I make my money this way. And so if you're going to be upfront about it, cool. But if you're going to hide it, this is the problem in our industry. There's a lot of games, money moves back and forth and nobody talks about it. And that's the part that I feel is needs to change. It's 2023.
Okay. So
anyway, there's a lot of stuff.
There's a lot of stuff, but a lot of stuff to unpack there. But let's just quickly say for EQ and Home Trust and Scotia and all these people who I've known for all these many, many years, this stuff has always existed. It is existed historically. Like I can tell you this, the people who operate all those businesses, the people at the very top of those lenders, they arrived to an existing situation that came about 30 years ago, 25 years ago, many years ago. And yes, if you asked the super brokerages, if you asked the big networks, why are you getting this money? Why aren't you distributing it to your group? At the end of the day, they would say, and possibly quite correctly, well, who the hell is going to negotiate the cheap E&O insurance? Who the hell is going to negotiate this, negotiate that? Make sure, hey, some of your brokers, some company wanted to cut off and we got that dealt with. We fixed that. Right. Okay. So, there's just there is a case to be made. Now, I agree with you. That in a perfect world, there'd be transparency,
right? That
everybody would understand everything perfectly. But as a guy who runs a brokerage for a long time, I don't actually run it. Like Sharon runs it and a couple other people run it. I'm just interested.
You're the marketer.
I'm an interested bystander.
Yeah.
Okay. I don't even own any shares. So at the end of the day, there is certain advantages that the networks can bring. There is certain things that they can do. There's certain things that they can, and like you just said, very truthfully, there's investments in technology that are very, very hard to do. Mm-hmm. And some people, very expensive, very expensive.
Really expensive.
And that they have done those things. And they've also created some ease of use, I've known Gary Morris forever, for basically as long as he's been in the game. And there's something, and Gary takes a lot of flack. Okay. He takes a lot of flack because he's a big personality and he's the top of the food chain. Okay. It's as simple as that. But I would say this about him, that he's provided systems and help to brokers and brokerages that not everybody, we just discount it. Like every people who join Dominion Lending, and we're not going to argue the ins and the outs of it, but boom, they've got themselves a website. Here, just take it. Okay, it's yours. There's an application system. Here's this, here's that. Oh, and there is advertising. There is for reals advertising for Dominion Lending. It exists. Okay. We can argue back and forth about the effectiveness of it. Who cares? It's real. Okay. We can even argue whether it's more, if the advertising is actually is aimed at bringing in leads or whether it's aimed at keeping agents happy. Okay. Right. We can argue all those points, but whatever it is, it's all true.
Yeah.
It really exists. Money's being spent. Conveniences are there. So I take nothing away from those situations because It's different strokes.
I'm saying the same thing. So I'm not saying that these things.
Your thoughts are transparency.
Is where I see. I'm not saying that brokerages shouldn't make money. I think they have to, or they have to keep their lights on. We have to make money.
Yeah, absolutely.
But I think that where it falls down is the lack of transparency. And people, we hear murmurings of it, but nobody is, or people. I shouldn't say nobody. There seems to be a lack of transparency that is the challenge. I think that, like, again, back to Gary and those guys, I think that he's done more positive for the industry with when he came in and shook things up. And,
100%.
And he shook up the old guard, and they were like, who are these guys that came in? Who do they think they are? And so hat tip to them, kudos to them. I think that in 2023, where we're at today, I think that the next stage is transparency. We need to move to what I call radical transparency, where you're like, we're just going to be on the table with everything. And then let people decide who's a fit culturally, who's a fit, whatever. But that's where I push back against it. But
listen, radical transparency, it could be its day. It could be its day, absolutely. But
we live in a time where we don't trust anyone anymore because just think about this. It's so easy to do deep fakes.
It's all true.
It's like, so I honestly, this is what I think. So our brand promises radical transparency because I believe that we live in a time where we can't trust people, where it's easy to fake things. And I think that transparency will be a superpower because so few people believe it or see it. And so I think that for me, I'm like, that's what we will hang our hat on, is like being like, that's how we have to run our business. And so, and other people will adjust or won't. I don't care. Like, again, I'm not paying attention to what anybody else is doing.
Ultimately, you have to observe your competitor, because you're basically an idiot if you don't observe your competitor. It's just ridiculous. Okay. You observe your competitor, but you are not designed to just react to the competitor. That doesn't make sense.
No.
You have to be on your own path, exclusively on your own path, and observe what they're doing. Because if you don't, that's not smart. No. But you have to stay on your own path. Mm-hmm. All right. So what do you feel are the big challenges facing not necessarily mortgages or housing or anything else? What are the challenges that face mortgage brokers and agents in the next couple of years? What are the big challenges we're up against?
Well, I think that the banks have obviously become a lot more competitive in the last little bit. Like back when I started, it was like, we're not touching that, and you'd just be like, you'd feel like a rock star because you could go beat them, and they would not play ball. Now they come in and they want to cut the legs out from under you. So I think it's going to be more competitive from a rate perspective, and even there's stuff that the branch will do that we can't do, but conversely, there's stuff that we can do they can't do.
Yep.
So you have to really understand, like, pick a pond that you can fish in that you have a competitive advantage. Like, I never used to do long-term rate holds on pre-builds. Forget it. Like, there's no point in me trying to tell someone I'm going to hold a rate for 2 years because like those that.
I don't think you can.
You can't. But that's what I'm saying. So like, don't even go in there. Like, why bother even like that's so you've got to get better at that as a mortgage broker. I think that other challenges will be that the adoption, the people who are rapidly adopting the new technology to improve efficiencies will have a slight competitive advantage. I think if it's like a guy who was building houses using hammers and nails versus an air compressor nailer, like, he's just faster. He just can get more done. And you'd be like, how does this guy seem to run circles around me? Well, he's just using a better tool stack. I think that's going to make a difference. I think that in terms of the market, like, there's like, if you look back over history, there's always periods where the market sucks and some great companies and people come out of those markets. Yep. So it's a rounding error in the grand scheme of things in terms of if you're doing the right things. But a lot of times people, they get lazy and they don't want to do it. So I think the market's going to be challenging, but it always is. And that's everybody's in the same market. So that's irrelevant. I think that, I don't know. And then consumer sentiment, obviously, like, if you look at in the US, they've got some banks that have gone under that's created some like mistrust, at least in the US, of some of the smaller guys and money moving to the bigger guys. In Canada, I don't think we have that issue, but to the same degree. But I don't know. Like, I think it's exciting, honestly. When I think of AI in particular, it's slightly terrifying and also exciting. It's like, this could be like radically change everything, or it could be, but I'm like, I'm going to adopt and use it as much as I can rather than be run over by the new technology, right? So last example on that, a farmer who used to use horses to plow a field, and then tractors came along, and the farmer who didn't want to learn to use a tractor because it's like, well, I don't want to have to learn how to fix it, and there's all these other things, he could plow 6 times as much as a set of horses. We have new technology coming, and people who don't want to adopt it are going to have a disadvantage. And so I think that brokers need to look at ways to adopt technology and harness it and don't try to build it. I think building technology is that's a fool's game if you're a mortgage broker. Just use other people's stuff because you will not be able to out compete these guys. They're way too smart. They're way too funded. Just use what's off the shelf. And that's my thoughts on that. So,
well, we got to avoid Skynet becoming self-aware, right? I mean, we really got to avoid the IA deciding one day, I don't think
you guys are. Yeah, you're a virus. We need to get rid of you.
Yeah,
it's like,
yeah. We're just going to keep a few of you around to polish the equipment and get rid of all the rest of you.
Exactly. To mine for equipment for us.
Yeah, I think about shit like that. I really do. I this like when the guy told me that. Oh yeah, by the way, AI has hallucinations too. They just make up lies as an answer. I thought to myself, is that a little too human? I mean, like seriously, that's.
Yeah, AI had too much to drink last night. And now it's like, oh man, my answers today are terrible.
I do like the idea that you have to rise to the challenge. I do like the idea that you have to accept change because everybody who's desperately fought change has failed.
Yeah.
But the best thing you said is, don't build it yourself.
No.
Fucking stupid. Right. No. That is just you are the again, you've tried so much. You've tried so many different things. You've tried so many experiments. You've learned same way I learned. Don't build it yourself.
Don't build it. Like I start when AI first came out, I'll be completely frank. I started down this path and then I quickly realized I'm like, there are people, I pulled the plug on it very quickly. I'm like, there are people so far ahead of me that have an understanding of this. It'd be like, it's like when we see these tech guys come into the mortgage space, I'm like, those guys are going to get their asses handed to them. And I'm going to their space and I'm not going to win in their arena either. Like they understand that arena. And so like, but one last thought on that. So when I was at Rocket Mortgage, I was like, what do you guys use for a tech stack? What is your CRM? Like Salesforce. I'm like, why do you use Salesforce? You got like they got an army of developers and they're like, it is the biggest CRM in the world. And we can't out Salesforce. And if there's any tool that we want to use, somebody's already built it. We can flip a switch and we can have access to it instantly. Why are we going to build something that's someone else's profession? So I think it's a fool as a mortgage broker to think you're going to build, very, very few people build tools that are actually going to compete against what's out there. So I have no interest in that. I'm just like, let's assemble them. Then you can be nimble. Like, okay, this tool is not working. Switch in another tool. Like you can be way more nimble if you use tools rather than trying to build tools.
Yeah, and don't even adapt tools. Like seriously, like wait till something is fully finished. Yes, we've completely finished the adaptation for the mortgage marketplace of this tool. Okay, you sure? Yes. Well, I'm still going to wait a year till your license fee comes down because honestly, we need low cost associated with this too. Scott took a picture of my chair today when he came by our office.
Yes, I'm going to post it. It's pretty rough looking.
It is the word. It is the.
You wouldn't get $2 for that in the yard.
No,
sale.
You would not.
You would not. Nobody would pay $2. Maybe because it was yours. People
now hold on a second. I got to finish the story of why that chair is special. Okay, that chair was very, very expensive 15 years ago because it is one of the few chairs designed to hold up a person over 300 pounds for many, many years. That you actually had to order that from a special place that just suits fat people. Like seriously, you read when I read the advertisement for it, it said, if you're over 400 pounds, don't worry. This will keep you sitting. It will not collapse. You will be fine and it will last for years. Okay. So the real truth behind it is it's comfortable. It does deal with my 300 pound existence.
Mm-hmm.
Okay? But I'm not going to buy another one because another one's like $2,800, $3,500. So it just looks like rat shit.
Right.
This chair. It just looks terrible.
Yeah.
Okay. But that it is.
But hey,
there's a reason behind it.
It lived up to the hype. If it's been 15 years and it's
15 years supporting this huge ass of mine through the whole time, no flaws, no problems. Like it looks like it's disintegrating, but it is holding up. It is holding up my huge ass the whole time. And look, the truth of it is that, and you know this because I've listened to many of your podcasts, and you don't talk about it every podcast, but you often circle back to it. Okay, that the other thing about running a business is watching your expenses, because I don't think there's any venture capital money pouring.
No.
Checks down on bricks, right?
No.
Okay, absolute no venture capital money pouring money down on our situation here. You and I know people who venture capitalists poured money down on, and you alluded to Rocket. By the way, let's say something about Rocket. There's some guys that I ridicule relentlessly, ridicule endlessly. Like I never give up on some of these companies that I ridicule. fine. So yeah, that I do that sometimes.
Yeah.
I don't.
It's your show. You can do what you want.
I do whatever the hell I want, but I don't ridicule the Rocket guys because I've talked to some of them. They actually, the leadership group there actually has a sort of an interest in the whole like. The people at some of these other companies pretend they're not in the mortgage brokerage business. They pretend they're fintech companies. Well, interestingly, you're funding mortgages with banks and others, or in your own lender or CMHC mortgages yourselves. But so why are you pretending you're not in the mortgage brokerage business? But oh no, we're a fintech company. Okay, whatever. That helps with the VCs. That helps explain why you keep losing money.
Right.
That helps. But I like the Rocket guys because the leadership team there, if you want to talk to them, they'll talk to you. If you want to visit them, you can visit them. If you want to ask them how they work or ask them questions.
They've been very great.
They are active participants in the mortgage brokerage industry, okay, which I like. I like a lot, okay? Because if you want to pretend you're not really in the mortgage brokerage industry, as a mortgage broker, I don't have any time for you. Like F you, okay? Like, don't pretend you're something you're not, all right? But we do have come to notice that there is just a lot of money being spent on human beings at those companies, right? There's a big payroll.
Oh yeah,
at
for sure.
all these companies.
It would terrify me. I'm not going to lie to you. If I had to face that payroll, I would not. I'd be back. I'd be doing something else pretty darn quick. I think that the thing about cash, and I had a business once. One of my dumpster fires was a business I raised some money for, and I had a smart friend who's got like multiple degrees, and we had a spreadsheet, and it looked like a rocket. It looked like a hockey stick. It was like our spreadsheet showed us making money slowly, and then all of a sudden, lots of money.
Guaranteed.
Yeah, I was like, this thing's going to be amazing. And I was like, this is going to be fantastic. And we had no plan about how we were going to get customers. We didn't have a direct-to-customer path, and burned a whole bunch of cash, lost money. It was a catastrophe. Lost my investors' money. Ended up taking out a second mortgage to pay back my investor, even though I felt terrible because it was friends of mine. And I was like, I'm not that kind of guy. I'm not. So after that, I was like, I will always gravitate towards find the customer first. Figure out if you can't find customers, then what's the point there's no point adding money to something and maybe that's wrong and I think small, but I'm very much aware of like, I like to, and it makes you more creative. Having a lack of cash makes you have to be creative. It makes you be like, it's a great constraint when you can just write a check or bring people, like there's so much waste. And so I think that you're very good at avoiding waste. That's why you're in a business so many years and you can run the model. And I don't think people even understand how your model really works. I think that from the outside, they think, oh, they don't know. They don't understand the game you're playing. Like you're playing chess and they're thinking you're playing checkers. And I think that when it comes to managing your business and your money, you have to be on top of it. Like I watch it like a hawk, and if we need cash flow, I get creative. Like I get like not creative in like just in like, okay, what do we do to improve cash flow, or how do we not hire too fast? And so all that stuff I'm paying attention to because I don't want to go raise a bunch of money because I think it'll make me lazy, honestly, and make me less creative.
So it's funny when Scott, when Scott arrived, I was in the bathroom talking to a lender vice president because I didn't explain that I was in the bathroom at the time, but that's what you do.
This is open. It shows everything's this is transparent, radical transparency.
Radical transparency. Like I'm sitting on the toilet and talking to the lending vice president, who's a good friend, and then I come out and there's Scott, and we start talking. And it's amazing that the first things that we started talking about, maybe the second thing after saying hello, was what is the key metric you watch in your business every day? Every day, what is the key metric you watch in your business? What are you looking at? And I just looked across at the screen and I said, I see leads coming in right now. Like I think about leads coming in. Is there enough leads? Are they up? Are they down versus yesterday versus last week? What type of leads? What source of leads? And I just think about it daily. And I said, well, what do you think about? And Scott said, I think about agent acquisition every day, like every single day, about is there calls out? Is there relationships being created? Is there people getting signed up? When will they finish being signed up? When will they transition to our brokerage? When will they get going? When will they get licensed? When will we see applications out? So it's fascinating to me that when you talk to some of these guys at the
well-funded,
shops, the highly funded venture capital funded shops, they will talk to you about all kinds of shit that is very esoteric and, talking about the future and talking about pivoting and talking about this and that.
I hate that word pivot.
Yeah, I hate that word pivot and how I'm talking about these kind of, how the development is moving forward. And then I reflect back on Scott and I, and we literally look at the most basic thing in the world to our business. It is so basic. It's like the farmer, the dairy farmer, figuring out how much milk's coming out of the cow that morning. Okay.
Right.
That's the important part. Not necessarily, am I going to meet my quota? I mean, we're going to buy new equipment. We're going to do what I'm going to do. No. How much milk came out of the cow this morning? That's what I think about as the baseline. Okay.
Yeah.
And that's interesting to me. That's the sign of the actual entrepreneur.
Right.
That's the people who, I kind of don't like that word either, but it's the sign of the people who we have to make this happen on our own. We have to, okay? And to me, that's the sign of a successful future, is that the most basic thing is what obsesses us every day.
Right.
Just obsesses us. Okay.
Yeah, you think about it, it's you don't need to watch every number, but there's going to be one or two in your business that are absolutely critical. And leads tie to cash flow, because if you got a lead flow problem, you may be fine today, but in 90 days you'll be like, I got a cash flow problem. And so
on average, 63 days.
Yeah. So you measure to that level, right? So I look at, for us, I'm looking at how many booked calls are we doing a week, and then how many people are joining based on those numbers. And so it's like, if I push that number up, then everything else translates. And then if on the back end, as long as we provide the support, then we'll keep the people that are meant to be for us.
But you're obsessed with knowing that number.
I'm obsessed. I'm always checking that number.
So that to me is a huge contrast. And I would bet you any money that if we talk to the folks who started in this business, like even going back to Gary Morris, I'll bet you Gary knows how many deals funded last week. I mean, I bet you not every week, because some weeks he's just completely overwhelmed with a bunch of other stuff, and he's taking a break. Okay.
Yeah.
He's rich. He's successful. Take a break, get in the helicopter, off you go. Okay. Yeah. But he knows base numbers. I guarantee you the people who are playing with their own money know base numbers. They know the key numbers, and people who are dealing with other people's money just talk about a theory. What's going to happen. Talk about what expectations are. Whereas other people talk about, this is what happened today. Right. This is what happened absolutely today. So super interesting. Scott, thank you. I just ambushed Scott. I said, okay, Scott, you're here now. I had no idea.
Yeah. I thought, hey, let's meet
Although
up.
you did say we should record this. You did say that.
Okay. Yeah, no, I didn't think of it. I just thought turn on the phone and can record it, but I don't have this fancy setup. So this is fantastic. Thank you for having me. And thank you for having me on as the first guest of your
first
show.
Guest.
And if you guys, I watched the first episode that came out. It was fantastic. It's hilarious. And, it's a great show. So thanks for having me on.
Oh, thank you for being here. We really appreciate it. Thanks, Scott.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.